Today's part with the following interruption for a public service announcement.
Welcome to the Investing Intelligence Show, where we talk about artificial intelligence, companies, stocks, and trading. I'm James here with my co-host Kai, and today we'll be talking about Axon. I want to remind you that the opinions expressed on this show are just that, opinions. They should not be taken as specific advice to invest in a particular way. So, Kai, I got something with me. I wanted to start off this episode a little bit differently. I got a prop with me today, and it looks like, so you think that this is a flashlight. And sure enough, you see light coming out of it. But then if you run up to me, that happens. So this is my dog walking companion that I've had for some time now. And my dog just totally freaked out. He just jumped up. So this is actually made by a company called Axon. And it's called the Taser Strike Light 2. Looks like a flashlight, but has an added punch to it. And that's actually the company that we'll be talking about today. So it's pretty rare that I have some kind of cool product I can show from a company that we'll be talking about. Today is a rare occurrence. I don't think the iPhone is a very cool thing anymore. So finally, we found a company that has a cool product.
Is that particular taser, is that for self-defense or is it for your dog? I mean, for all the PETA listeners out there, if there's PETA monitoring, but
it's not a dog training tool. It's not a dog training tool. No.
That's almost on par with like the little mouse, destroyers that you can get in the store.
So let me just clarify a couple things. First of all, firstly, I do not use tasers for dog training. Rather, it is to repel aggressive dogs that might try to attack my dog, or aggressive people that might try to attack me. Luckily, that hasn't happened. But I have actually used this little contact taser against a dog that tried to attack my dog. But you don't even have to touch it to the other dogs. The noise alone scares dogs so bad, they will run away. So we're talking about Axon today. And they kind of started with this technology. They kind of started with tasers. I think they were even called like the Taser Company back in the 1990s when they got started, and eventually they changed to Axon. But believe it or not, as of today, they are defining themselves a little bit differently. And I wanted to actually just play you literally 30 seconds from their earnings call. And this shows you that no longer are they just a taser company.
Let's take a listen.
First, and possibly the most significant, is artificial intelligence. We are positioning ourselves as the indisputable leader in delivering the power of AI in practical, usable applications to our customers. We've been at this for many years, and our progress is accelerating as the underlying technology and the interest to adopt reaches critical mass here in the US and around the world. 1 year ago, I shared with you our vision for generative AI applications as we saw commercially available LLMs, large language models, coming to the market. I told you we would be ready to catch the ball. Well, in April, we launched Draft One, a powerful new AI.
So I'm going to stop it there, and I'm going to just kind of tell you a couple of things that they're doing in AI before we start to talk deeper about the stock and get your take on things. But basically, they have an AI large language model built into their, not built into the body cam, but built into their overall software suite. So when a police officer finishes a call, Axon can take all the audio from the suspect and from the officer, compile it into a police report, and it essentially saves a police officer 20 to 25% of their overall work hours during the day, because it's doing the police reports for the police officer. And the police officer still checks over the police report before submitting it. But essentially, it's writing police reports for a police officer and saving 20 to 25% of officer hours. That's a huge improvement in efficiency and productivity for police officers. So yeah, Axon is a company that serves police departments. Sometimes that can be local police or federal police. They do have a little bit of exposure to military foreign governments, but essentially they are working with law enforcement. And they've got a new segment that uses AI to look at license plates. So they do dashboard cams in addition to body cams on police officers. And we already mentioned their taser segment. But these dash cams now are reading license plates with AI everywhere the officer goes. And they can help, do early detection for criminals in cars with license plates that have a warrant out for them, things like that. I could go on, but just to get your take initially, Kai, how does this sound to you so far? Sound interesting?
So Axon has been one of my favorite companies. It's a brick and mortar company. I can understand what it does. It has excellent financials. Axon has been on my watch list for the last 2 years. I currently don't hold a position, but I have held a position multiple times in Axon. Let me just ask you a few different things, okay? And then in general, a lot of our listeners may be sort of asking, hey, Axon, initially, when we're talking about this, how is this an AI? Why is this on an AI podcast? And so I think you started explaining that really, really well. You do not sound like you're in law enforcement at all. I can obviously just tell that right off the bat, James. You're not a police officer, based on what you just said. But I think all of these sort of applications are great. Is the company just saying AI, like we've talked about other companies such as Intuitive Surgical, for example, just saying AI for the hype?
No, because not only so they've shifted a lot. Okay, so I can see how you would say, oh, this is a company that makes tasers and body cams. Why would they be talking about AI? They're saying AI for the hype. I can see how you would come to that conclusion. But if you look a little more deeply into the company and what they've been doing and who they've been acquiring over the past years, they are transforming into a software and data company. Okay, so earlier this year, they acquired Fusus, which is the global leader in real-time crime center technology. And it's essentially a company that uses video feeds and puts that together into AI and data. And so that's a huge acquisition for them. They're also getting into drones and unmanned ground vehicle technology too, which is going to be a big AI thing. So they're leading the charge in drones as a first responder. So pretty much when there's a 911 call, a drone goes out in place of or in addition to a police car. And here's the trippy thing they said on their earnings call. They said in 10 years, they expect a 1-to-1 ratio of drones to police cars. Okay. So, right. So they're saying the total addressable market for police drones, they expect to absolutely skyrocket over the next 10 years. And here's the catch. Right now, China is a leader in drones used in the US with their company DJI. But it's looking like the US may eventually curtail or ban Chinese drones or Chinese software on drones. And that's where Axon can come in and be a leader. So I would say that there's a lot working for them. They've been acquiring companies that are a little more adjacent to AI, autonomous technology, big data. They're becoming a data and software company over the past years. And they still have the tasers. I mean, last year, they sold more body cams than they ever have. I'm sorry, last quarter, they sold more body cams than they ever have in any quarter. So certain segments are still growing. But I would say no. Don't think of them as just a company that's pretending to be AI.
Right. So competitors, you mentioned the Chinese company, any other competitors? I mean, when I think of Axon, I obviously think of tasers, and then I also think of body cams and drones, etc. However, I also think of police. Those are just the first few things. However, I actually love this company as far as excellent financials, great fundamentals, and I really like how its research and development department has really led to actually the end game in their products that they're selling. So what other competitors do they have?
Yeah, it's funny you talk about their research and development department. So apparently there's some controversy where they wanted to do a drone taser that shoots a taser out of a drone, and then a bunch of their board members stepped down because they didn't want to do this. So research and development, definitely they've got that. Competitors, I do think on the drone. I mean, in the drone sphere, look, DJI is just globally renowned. DJI, I've got one. Your brother, who's a friend of mine, has a DJI drone. Everyone has a DJI drone. Actually, I just bought another one because they came out with a new one that's only $200, and it's a selfie drone. And it flies behind you and follows you with AI. Super sick. It's not even released until a few days from now. So DJI is the world leader in drones, and most US companies are going to use it. But already to this day, there are certain places where you can't use a DJI drone. Like in Florida, government is not allowed to use DJI, and other departments just made up the decision outside of Florida. Other departments just made the decision, we're not going to use Chinese drones. So essentially, with this war, this technology war between the US and China, I do think there's potential for companies like Axon to do more and more business. But yeah, as far as competition, I'm not. Let's talk about the other segments. Tasers, I'm not going to buy if I really need a taser to defend my life. I'm not going to buy a cheap one off of Amazon from China. If I really depend on a taser, like police officers depend on tasers for their life, they're going to buy an Axon taser. Now, there are different types of tasers. Some are contact, some shoot out the little probes, which is what Axon pioneered. But in general, I don't see them having a lot of competition on tasers. On body cams, yeah, there are cheap body cams off of Amazon, but it's a whole suite of software that they're offering now. So they've got 122% net revenue retention, which means they're not just retaining 100% of their customers, they're upselling those customers 22% per year. So they're actually able to push more and more software to existing customers, more and more sales to existing customers.
Right. So let me get to my one biggest negative with Axon, and that is the PE. So the current price of this equity, underlying equity, is too high for me, James. Give me a counter to that.
Well, there's not a great counter to that. You're right. You're 100% right. If you look at the forward PE, and by the way, we had some viewers who tried to roast us on one video because we were sharing PE ratios that were different than what they saw in Yahoo Finance. So we usually use forward PE ratios for rapidly growing companies, which is what you're supposed to do. So please, if you're a listener and the PE I'm about to say doesn't match up with what you think it is, please do some research on forward PEs. So we're considering their earnings for the next 4 quarters, not for the past 4 quarters. But 59 to 63 is their forward PE. So 63 would be a fair valuation, average analyst estimates.
Yeah. So what justifies a taser, drone, body cam company that has stable as well as increasing demand? What justifies a forward PE of 50?
Yep. That's a very easy answer. 35% year over year revenue growth. Okay. So you will see over time that PE ratios generally go in line with how fast the company is growing. This company is growing pretty dang fast. Now, I don't know. So margins are an issue I'd like to ask you about, Kai, because apparently there's tons of ways to slice this pie for margin. So they like to, on earnings calls, companies like to give their adjusted gross margin, which is always going to be way higher than like their profit margin. So their AGM, their adjusted gross margin is 62.5%. If you go and look at Yahoo Finance, you're going to see they have a 16% profit margin and a 7% operating margin. So that's one of the reasons why I don't talk about margins as much, because there's like a ton of different ways to come up with their margin number. So which one do you use? I mean, I guess what matters is you compare apples to apples, not apples to oranges. So you need to kind of know what is your margin number that you like to use and stick with that, compare it across companies and sectors. But yeah, so I guess
Yeah, I mean, so net profit margin is kind of a basic one that I like to use. I think it's great for just your basic investor out there who's basically saying, hey, I want to look up McDonald's and the net profit margin and see how that looks. And basically, the higher the net profit margin over 20% is excellent, right? A company like Axon, I think, is less than 10%. I think its current net profit margin is around 8%. However, it is a very highly valued stock. It has shown excellent growth, and the market does reward growth. So let me say that. Let me give you a few positives. The biggest negative I have is basically they're just what it's currently valued at in regards to the market and its competitors. And the things I love about it is basically a stable demand, an increasing demand, which is being shown in their revenue growth. I also sort of like the political climate, the geopolitical concerns that are out there in regards to Axon as a company. For example, we are seeing other companies benefit from AI, other chip companies benefit from AI in regards to the geopolitical climate with China. I like Axon in that sphere. I like Axon as far as police departments getting lean, finding different ways for police departments to invest, to protect and to serve the public, and Axon is providing some solutions and answers there. I also really love the innovation. But For those out there, please check out AXON. We forgot to say the stock ticker. It's a company with great fundamentals, which you know that I typically like those. This isn't a company that is not profitable, for which we have talked about, that is basically we're just looking at future. This is not Tempest AI. This is actually a tried and true company that is showing excellent growth, excellent growth. However, I am not a current buyer of Axon at the current evaluation because I think their forward PE is too high.
All right. Well, so I am buying Axon for their 35% year over year profit growth. And because they're trying to be an AI company and focus on software and data in addition to just tasers and body cams.
Yeah. Your timetable for that is probably 2 5 years. For our listeners out there, I'm looking at just the next 3 months. So over the next 3 months, I'm not currently buying Axon. I am buying Axon and any pullback. Axon is not going to be dragged down by their own fundamentals. Axon will be dragged down by overall market sentiment, period. And so when the market gets crazy and everybody gets fearful, I'm going to get greedy, just like Warren Buffett said, and I will be buying Axon then. However, at the current evaluation, I am not buying Axon with its forward PE.
You know, sometimes, Kai, you're dead wrong, but I would say actually this time you're dead right. And just to look back at why, I think JFrog is a good example of this. So with JFrog, you and I were both bullish on JFrog. And if I remember correctly, I think the valuation was a bit high. And then what happened when we had a downturn, not just a downturn in the overall market, but rather we had some bearish sentiment crop up in software stocks as a sector. So what happened to JFrog? Demolished. Just got demolished, even though it had pretty good earnings reports. And now it's crept back a little bit, but still hasn't really recovered. So that could happen to Axon. I get a little bit of the JFrog vibes, the kind of creepy JFrog vibes when I go to Axon's earnings call, and the earnings call has 12 views, and I'm the 13th viewer on the earnings call. That reminds me of JFrog a little bit. So I guess there's just, not the same amount of attention on a $2 billion company like there is on a bigger company like ServiceNow or Salesforce or something like that. So
it's great. One personal thing that I like to do, I don't think I've ever told you this, but I like to keep a running list, sometimes just down, or I'll create a little watch list of companies that I really want to buy. Fundamentals look great. Growth looks great. I want to buy them, but we're just too overvalued. And so whenever the market pulls back, we get something like we did in early October. That's when I'll go ahead and jump into those companies, especially in an investment that I'm looking in something that's 2 to 5 years, because I do think Axon is a company that you purchase and hold for 2 to 5 years. The Jim Cramer thing, well, you buy NVIDIA to hold or Apple to hold. You don't buy it to trade. Well, if you can get in at the right point with Axon, I think you're for me personally, is a good idea. But let's shift just a little bit and talk about this week in regards to MU. And for me, I'm going to make a point in regards to 3 companies that I am looking at over the next month. I want to pick 3 of them that I am very bullish on. And I waited for a while to jump into these companies. And so I'm going to relist them here. One company I'm going to pick is Amazon. So I was chasing Amazon for a little while. We had a pullback and I bought Amazon. I am still bullish on Amazon. It's my pick for this next month. The other company is MU. MU just released its earnings this Thursday. It's seeing a large investment in regards to AI and due to geopolitical issues. And the third company I'm going to go ahead and pick, and this one has been a little bit back and forth for me, but I want to give you your first 2 because I'm blanking on what my third one now is, James. You may have to cut this out, but I'm blanking on what my third one was. But Amazon and MU are right there for me. Oh, Chevron. I'm going to go with Chevron. I'm going to go with an oil and gas play. I'm going to go with Chevron. What about you, James?
Yeah, and I just want to correct one thing I said. So I said that Axon was a $2 billion company. It's $2 billion per year in revenue, but it's $30 billion market cap. So to give you my 3 stocks, I'm going to go super diversified. I'm going to do 1 AI stock, and then I'm going to do 1 election stock, and I'm going to do 1 hedge stock. So my AI stock will be, let's just go with something easy. My AI stock will be, I'll go with Qualcomm. Yeah. So, yeah, I'll go with Qualcomm for my AI stock. And then I'm going to go with DJT. So if Trump was to win, DJT will skyrocket. So that would give me huge upside there. If he loses, unfortunately, it could be cut in half or more. But that's my election stock. And then my hedge stock. I mean, so many great hedges right now. The REITs are doing well. Dividend ETFs are doing well. Your bond ETFs are doing really well, like TLT. So many things I could choose there, but maybe I'll just choose EDV is your extended duration. So EDV, extended duration bond ETF, that one will do really well if the Fed lowers interest rates another 50 basis points, if we see bad labor numbers. So I think you were saying 3 months. We're picking these things for a 3 month time period, right?
No, we can do 3 months. I was just thinking over the month of October. But the reason I'm bringing up basically Amazon and MU jumped on earnings, great earnings. I do think there's going to be some demand, especially with some of the things that we have happening next week. Some red flag reports. Amazon is cup and handle. I mean, Amazon. I was a buyer at 160. I mean, I just thought that was crazy for Amazon to drop near 160. So I'm currently hold a large position in Amazon. Full disclosure, it's my next pick. I think Amazon is going to over 220 or around 220 is my price target for Amazon. The other one, last one, so I put Chevron in there for a hedge. I like the dividend payment. Microsoft right now is I think going to be in a pretty good buy point. But I know those are three AI plays: Amazon, MU, and Microsoft. But
So first of all, I think I heard you say four: Chevron, Amazon, Microsoft.
I
and MU.
did.
So
I'm going to keep Chevron in there because as a hedge, I think oil and gas will start to do well if they're.
So are we picking four? Or are we picking three?
We're picking three. We're picking three. I just wanted for our listeners out there to go ahead and mention Microsoft right now to look at their technical analysis. But
so Microsoft, I'll just mention real quick. People are trying to give Microsoft the Google treatment. People are trying to say that Microsoft has lost its competitive edge in AI. Their share in OpenAI, which was 49%, has been diluted out by additional rounds of I don't want to call it fundraising, additional raises by OpenAI. They're issuing more stock. So the 49% that Microsoft had is diluted out now. So Microsoft, I think they're still a foremost player. People are trying to say that their Azure cloud, their AI cloud, is gradually losing market share to AWS. So they're saying Amazon is picking up in AI. So I would actually, if I still have your permission, I'd like to change. I'm going to change from Qualcomm to Amazon for allowed to pick one of the same ones. Amazon, DJT, and EDV are my three. Now I want to close out by saying one other thing real quick. I just want to give you a pat on the back because we were going to record on a different stock last Wednesday, or was it? So not this Wednesday, but the Wednesday before that was the 18th. And you said, well, no, we're going to do Talon. I wanted to do Talon. And you were like, well, let's do Constellation. And I said, well, we can do both. So what I'm going to share with you right now, this is a little text document I made showing how well the things that we talked about last week have done since we recorded. So Constellation, since we recorded on the 18th, is up 29%. So that's a 29% return in 7 days. Talon is up 8% in 7 days. We also said that we were bullish on uranium and uranium ETFs. So URA ETF up 15.4% in the last 7 days, since last 7 trading days since we recorded. URNM is up 17.2% in the last 7 trading days since we recorded. So if someone had bought all 4 things, they'd have an average return of 17.4% since we recorded that episode. If you just bought CEG and URNM, you'd have a 23% average return in the last 7 trading days since we recorded that episode. So, I was on to Talon, you were on to Constellation. I think I brought up uranium. Overall, pat on the back to the both of us. Huge returns in just 7 trading days. We came in right before that one, perfect time. Now, I'm not going to fail to mention that we've had some not as great calls, mostly JFrog, and I was bullish on SMCI before it had a big drop. But so not all of our calls have been great, but if you look at the totality of the things that we've said that we're personally interested in, not recommending to anyone else, but we're personally interested in these things, they have performed extraordinarily well since we started this podcast. So especially this last call from not this Wednesday, but the previous Wednesday, pat on the back to you, Kai, for bringing that one up, Constellation Energy.
Well, it was, gosh, I know it takes a little while to edit these episodes. James is doing an amazing job, but Constellation, and we did not know that announcement was going to happen on Friday. So we had recorded on Wednesday, and it was basically like we both like these IPP companies, CEG and Talon. They're still excellent companies to watch. You may wait for them to sort of form of handle. CEG in particular has not given any sort of their gains back. But man, the demand for energy, and I keep reading more and more, learning more and more, and nuclear seems to be the solution. It really, really does. It seems to be an obvious solution. And so, yeah, this is all going on. Build out is going on. Thanks for taking the time to listen to me. We need to do an episode about next week and some of the red flag reports and check in on seeing how some of our picks are doing.
Yeah. And just wrapping up, next week we got a number of key data coming out. So I want to highlight ISM services, ISM manufacturing, and then on Friday we have the labor report. So really big reports coming out next week. It is a very big economic week. I'm surprised. Well, it looks like the stock market just closed. So we just hit close. So I'm not sure. Let me see where we closed real quick. Stock market just closed a few seconds ago.
NASDAQ is still not at all-time highs.
Down 0.4% on the NASDAQ. Maybe that's a little bit of de-risking for next week, but we might de-risk a bit more leading up into the labor report on Friday. I don't know.
Right. All right, James. Thanks.
Well, thanks for tuning into our show. Please give us a like or comment. We'll be back in the next episode to cover more AI stocks. You can find all our holdings and trades at investingintel.ai. Thanks so much, Kai.
The first revolution is when you change your mind about how you look at things and see that there might be another way to look at it that you have not been shown. You will not be able to stay home. You will not be able to plug in, turn on, and pop out. Revolution will not be televised, and be no rerun, brothers and sisters. The revolution will be live.